What's up, guys? It's April 14th, 2025. We had a sideways day in the market. Looks like the volatility is dying down. I'm going to give a quick shout out to everyone that's been following me. I appreciate you guys. Thank you. You guys are returning. I'm assuming you're learning something. If you learned something, share the show. I'd appreciate it. And tell your friends about the Discord. I definitely want to start ramping up with breaking down charts, and I'm going to start doing Q&As on the weekend, I think. That way I can figure out where you guys are at. So, yeah. Man, I think almost for months now I've been saying leg one, pull back, leg two. I'm sure you guys are getting tired of me saying it. Leg one, pull back, leg two. This is a major leg one, leg two, and with each leg there's multiple legs down. So leg one, pull back, leg two, pull back, leg three, pull back, leg four. We go sideways, trading range behavior. Breaking out of this trading range, the market cycle resets. So leg count resets, leg one, pull back, leg two, pull back, leg three, pull back, leg four, ends up not making a new low. We get a higher low. Bears sell and then the market rallies, trapping bears. Bulls broke this what is that, lower high? Bulls broke the lower high. I'm gonna zoom in right here. They broke this lower high. That's bullish. However, this is really bad follow through. You could argue that this was a climactic bar and needed to pull back, and it does with this bar here. So then now this bar is bad follow through for the bears here, and now we're getting again bad follow through for the bulls. So kind of confusing times. And what does Al Brooks say? If you are confused, that's the hallmark of a trading range. So we are in trading range, and we can see that with this doji here. I'm not saying volatility is dying down, but it is smaller than before. I think today was one of the smaller days we've had in a couple weeks, and it's still 101 points, guys. So that's not really that small. But I mean, that's compared to this bar, that's only 1/6 of the range. So volatility is dying down. It's kind of good for me because I'm ready to trade. You know, a few of you know that I got smoked on the volatility, so that sucked. But I've had a lot of time to just relax, recoup, and I've been studying, working on the YouTube channel. I got the trends videos coming out. I got some more stuff for the membership for the channel coming out. I'm just excited, and I had some time to clear my head. I'm gonna do the live Q&As, not this week because it's Easter Sunday, but most likely whatever the month is after April is, I'm gonna start about April, May, March, so around May. Anyways, let's just talk about the price action. That's what you guys came here for. Big gap up, R1, bad follow through for the bulls, good for the bears. It's showing that bears want to reverse. Well, it's showing that the bulls are not getting follow through at highs. Bar two, good bear bar closing out slow. Chantier second leg down, and then we see bar three. This is three legs lower. Leg one, pull back, leg two, pull back, leg three. Bad close on bar three. Bulls are starting to buy the 50% of the gap up, and I'm just eyeballing that. I'm starting to prefer to eyeball things just to practice. So that looks about like 50% pullback, low of 81-ish. And the bulls get a few legs down, and at the same time the bulls get a few legs down, the bears are getting their legs down. So the bears are getting continuation from this, and the bulls are getting continuation from this at the exact same time. So what do I mean by that? Leg one, deep pullback, leg two, pullback, leg three ends up breaking out. For the bears, that's the bear leg count. For the bulls, leg one, pull back, leg two, pull back, leg three. So the market, you can kind of see how the bulls and bears are dancing with each other. Bar four, sells off, rallies, closing bullish. Bar five, same situation. Both trading range bars. Bar six, bear bar closing on slow. But it's not closing far beyond bar five. So that's warning you something's not right if you're looking for a sell. 2 seconds, I need to clear my throat. Okay, thank you. So bar six, that's not good. That's a low one short after three bear bars, and this is a big gap up, so not the best trade. I do think people are going to take that looking for a collapse down. You have two options when you see bar seven: you get out, or you short again, and you get out at the 50% level. Depending on what size you're trading, the volatility of the day, you could, if you can acknowledge we're in trading range. Because why are we in a trading range? What's the fastest way you know we're in trading range? We have a micro channel we can't see, and then we have a bear micro channel down. So that's two micro channels against each other. So by bar three, you can say, okay, that's trading range behavior. I'm not suggesting you guys average out and lose a position, but to read context, if I wouldn't be short here because the system I trade, but if you were to be short here and you start to see this rally past bar 6, I would get out of shorts and look to trade again later. And by later, I just mean like 1 bar. I don't mean like 4 hours from now. Anyways, bar 7, bull bar closing on its high, but it's coming after 3 bear bars, so this could just be a 2-legged pullback, like 1 pullback, like 2. Bar 8, right? Bar 8, yeah, bad follow through for the bulls, good for the bears. Testing the low here. This is a trade I would be filled on. I would get filled on 7 and I would get out on 9 or 10 because I'm trading the breakout point from 1. I saw that. Didn't take it yet. I'm definitely getting ready for it. Bar 9, bear bar closing around just below its midpoint, has a tail, so the trading range behavior is stacking up. And then bar 10 is a trading range bar, has more tail than bear body. Bar 11, inside bar breakout mode. If you're short or long, best to if I had to be something, I would be long. I wouldn't want to be short after 2 to 3 legs down. Like 1, pull back, like 2, pull back, like 3. Like 1, pull back, like 2. It's just a hard short because of the big gap up. Bar 12, bull bar closing on side, but bad follow through with 13. 14, again, we have another bull bar, but not breaking past, really. I mean, it traveled 1 tick above 13, and then so it closed below its 13th high. 15, bear bar, acting as a pullback, so there's 3 legs here. Remember what I said in a previous video, major legs are made up of minor legs, so if this was 1 leg, we could see the 3 legs here. Leg 1, pull back, leg 2, pull back, leg 3. 16, 17 is creating a wedge top. You can say a wedge top here, you can say a wedge top here, you can say a wedge top here. What matters is you acknowledge that we're in a 3rd leg in many different ways. Leg 1, leg 2, leg 3, leg 1, leg 2, leg 3. Bar 18, bear bar closing on slow, strong to get 2nd leg down. We are now at trading range highs, so you could short the high of 17, but that's a riskier trade. Well, it depends where your stop is, right? If you short here, your stop can go 1 tick above bar 1, or you can do a measured move that's a tight stop. So there's 2 types of trades. There's low risk, high reward. Did I say that right? No, I did not say that right. That would be the best trade, right? Low risk, high reward. No. There's low probability, high reward, or there's high probability, low reward. If you're taking a short above 17, that's a low probability trade with a high reward. And it worked out this time. 18, since the risk is big, the probability there's momentum. That means there's momentum. Where in the first leg you could short here for a scalp, and the probability is you will go 1 tick past 18 is low. There's an old stat I used to trade a lot against. I don't use it anymore, some trading system, but it played out pretty nice here when we say by the time bar 18 gets printed, you could either see the high or the low of the day, and that's stayed true today. Bar 19, follow through for 18, that's good for the bears. And then we see 20 and 21, that's a 4-bar bear micro channel. They're definitely going to want to get a 2nd leg down. Bar 22, it's just shallow. It's a pullback, so it's a first reversal. That's my favorite type of trade. I'm not taking it at the moment. I'm just trading limit orders. So yeah, you short the high of 22. You're immediately in profits 23. Then you get a big bar 24 breaking out below the EMA. You could say market cycle resets below the EMA, and then you get 25. First pullback. It's not 3 bars, so I wouldn't take the short above 25. But in this situation, it worked. Big bar 27, bad follow through 20. Excuse me, big bar 26, bad follow through 27. Another big bar 28, closing against the slow. And it is actually, I'm just eyeballing, but it looks like it's growing. So it looks like 28 is bigger than 26. I said that right. Yeah, just barely bigger. But what I'm getting at is that that's climactic price action in this 3rd leg, so be wary of that. If you're getting short here, just be cautious that you might have to scalp out quickly. And you can see it went sideways more than it went down, and then boom, 33, it goes down, rallies back up. 34, bull bar closing on its high, market cycle is resetting. Look, we're going more sideways in the trading range. So at that 3rd leg, that 3rd, 4th leg, 28, see more sideways price action than lower prices. Trading range days, the open becomes a magnet. So if you're looking for a bottom, I don't think it's good bottom fishing. You could just see this trading range and wait. Then you see this 4 or 5 bar rally, then you buy around here and you target the 1 low or the midpoint, but the 1 low, the open. Excuse me, not the 1 low. I meant to say the open of the day. The open of the day is right here, and that was Metal 69. So I'm jumping around, but let's get back to it. I hope this is helping you guys. Let me know in the comments if you like this or if you want to see something And yeah, 35, bad follow through for the bulls. 36, bear bar closing on its low. Big bull bar closing on its high. 38, bad follow through. Then we're going more sideways on the EMA. We're getting stuck below. There's resistance above 28 right here. It's trapping traders because bulls can't break out and bears can't sell. Then we see a breakout 42, bad breakout because of 41's tail. It doesn't go far beyond that. Trading range low is 33, and we don't tag that. 40, where are we? 43, big rally, but doesn't close above the EMA. But that's warning you that bulls are trying to rally. Now bulls are trapped. Then we see a 4-bar bull micro channel, 48, first pullback. There's also 2 legs within this. There's 3 legs. Like 1 pullback, like 2 pullback, like 3. Let's stop. Bears try and sell that, testing the low here. They get trapped 48, and it goes more sideways again. Now we start to see a rally 52, 53, 54, 55, 56. Again, another 5 bars, but the market could go from expansion to contraction, and that could be a leg count. Leg 1, pullback with 2, pullback with 3. Leg 1, pullback with 2, pullback with 3. Leg 1, pullback with 2, pullback with 3. Leg 1. That's their leg. These 4 bars trying to get a second leg up. 57, same situation like 22. It's a good first reversal. It's shallow. You can see a tail. So bulls were buying the low of 57, and then it rallies for another leg higher. That's also made up of 3 legs. Leg 1, pullback leg 2, pullback leg 3. Shallow pullback. And then this entire structure gets its third leg, 67, 68, 69. 69 is testing the open. The open is a magnet on trading range days, and then we go sideways to down. Bears got the close below the EMA. 70, good bear bar closing on slow. 71, pullback. 72, bear bar closing just below its midpoint. Leg 1, pullback leg 2, pullback leg 3. And then we go sideways again with 75, and then 76, 77, 78. We start to break below the EMA to reset the leg count. And all while I'm saying reset the leg count, we are still within this trading range, and today is a trading range. So there's an overall market cycle going on. So yeah, that's not necessarily 20 minutes, but it's about 12 minutes. Go over the trades, I guess, real quick. I would take this trade here. I would take that. I would get filled on 7. I actually was looking at 11, and I might have taken a loss there. I don't know what I would do real time, but I do know I would have tried to get filled here. I don't know if I would have taken the full R or if I would scalp out for a small loss. I would have liked to take this one, but then I watched it throughout the day, and I was like, after I see the market cycle resetting, there's a good chance I would have canceled my limit order or taken a small loss on that. So that's another scalp. But for the 3-bar situation, you could take this as well. Short there, short the high, short the low 123. I wouldn't take this. We're late in the leg. I would like to see something like that, and you could say even the range is 43, and that could be your target if you don't target the open. So then let's do the 4 bars as well. So you see how there's many ways to play the same setup. It's just kind of, you find something that you think you could be consistent with and just gun for that for a couple months, and then you rewire yourself. You look at your results and be like, oh man, I recognized I got long around here, but I forgot it was a chain range day, and I could have held to at least the open, and I could have scaled it on each new micro channel. So there's so many ways to get nerdy, but you can only get nerdy once we focus on one thing for an extended amount of time. Even a couple months is not a long time to focus on one thing. Tons of trades today, guys. I hope you did good. I hope you guys are doing good. I'll talk to you guys in Discord. If you learned something, share the show. Don't be a hoe. Everyone have a good one. I will talk to you guys tomorrow. Stay safe. Stay smart. Keep studying. I'll talk to you guys later. Thank you for your time. Bye.